Hey guys, so in this video I'm going to be going over the 6 best stocks to buy in July 2021. Over the past couple of weeks, I've been researching a ton of stocks, and these are the 6 stocks that I think are the best buys right now. I would encourage you guys to watch all the way through the video to get my full analysis on all of these companies. I will be going over their financials as well as giving you guys an overview of why I think they will grow this month. Alright, let's get into it. The first company that we're going to be going over is going to be PayPal. PayPal is a digital payments company that operates both in the US and worldwide. They've recently gotten into crypto as well, so that's one of the reasons why it could start to boom here very soon. The company's platform allows for both personal and business banking. You can withdraw to your bank account, you can send and receive funds with PayPal. I'm sure a lot of you guys have heard of it. So PayPal currently has about a $340 billion market cap, as well as a PE ratio of about 66. If you guys didn't know, a PE ratio should be between about 20 and 60, but for these tech companies that are in the kind of infancy of their companies starting, it is pretty good to have anything below 100. Something such as Tesla has about an 800 PE ratio, just for comparison. Their next earnings call is coming up on July 28, 2021, so that is going to be a catalyst coming up this month and could run up all the way up until that catalyst, and hopefully they actually produce good numbers so that could be a catalyst as well. As for their most recent earnings calls, they have actually beat on their last 4 earnings call in terms of EPS on each earnings call in the last 4 quarters. As far as revenue goes, in the last 4 years they have increased revenue each year, as well as increasing their earnings every year as well. Yahoo Finance's recommendation rating system has this as a 1.8, which is between a buy and a strong buy at the moment. If we go into the statistics of PayPal, we can see here that they have about a 22% profit margin, which is very healthy for a tech company at this stage in the game. They also have about $50 billion worth of current assets and $38 billion of current liabilities, so they have about $12 billion more of current assets and current liabilities, which is overall good. I'd like to see that number a little bit higher, but it's good for now. And then they have about $8 billion of total debt. If we take a look at tip ranks for a stock forecast, we can see here that out of 24 ratings, about 21 are buys, 3 are holds, and 0 are sells. And then the average rating has about a 10% upside for PayPal at $317 and a high of $375 as well. Overall, I see PayPal as a safe bet going forward, and it's a staple of my portfolio at the moment. Alright, now for the second stock, we are going to have FIVERR, which is a bit more of a riskier play in my opinion. FIVERR operates as an online marketplace worldwide, and it enables sellers to sell services and buyers to buy those services. If we take a look here, we can see that FIVERR has about an $8 billion market cap, so that is considerably less than PayPal. Obviously, FIVERR is a much smaller company, so they have a lot more room for growth in the future, but that does make the stock a bit riskier, as an investment of say $1 million is going to move the stock more than an investment of $1 million in say PayPal or something like NVIDIA. But yeah, they have a negative 2.29 earnings per share right now, and an earnings date in August. So we will have hype going up to the earnings date, but during the month of July, we will not have an earnings here. As for the performance, Yahoo Finance predicts green for short term, midterm, and long term. That means it's going to go up. If we take a look at earnings, they have beat or met on the last 4 earnings so far, so that's good. As far as financials, earnings aren't too good over the last 4 years, but we have seen an increase in revenue every year for FIVERR, and that's what you want to see out of these young companies. As for Yahoo Finance's recommendation system, they have it as about a 1.9, which is between a buy and a strong buy. If we take a look at the statistics, we can see that they are actually not profitable right now. They have a profit margin of negative 11%, which is not good, but we do expect to see this with these really young companies. FIVERR is a much younger company than PayPal. Obviously, you can't really compare the two because they're in different sectors, but overall in the finance sector, they are 11%, but they are younger companies, so they are working towards getting profitable right now. As you can see here on the income statement, they actually did $68 million in total revenue in Q1 of 2021, which is very good, and the cost of revenue was actually only $11 million. So the gross profit is $56 million, but then they also run into into other roadblocks when they have expenses such as $82 million worth of expenses, and that's why they're not profitable. If we come here to the balance sheet, then we can also see that they actually have a very, very strong balance sheet. As far as total or current assets, they have about 560 million in current assets compared to only 179 million in current liabilities. For total debt, they do have about 375 million, so that is a bit of a problem, but they will be able to pay off debt as they do have a lot of assets at the moment. Overall, FIVERR is a much riskier stock, but if you want your portfolio to do well long term, then you're going to have to bet on a bunch of riskier stocks when you're younger, say between the ages of 20 and 30. So it's good to have stocks such as PayPal, which are less risky and provide better returns on your money, but then FIVERR, which could have really good returns on your money and are more risky. For the third stock of today's video, we're going to have Google. Alphabet Inc., also known as Google, provides online advertising services to the United States, Europe, Middle East, basically anywhere that you can think of, bar a few other countries. They operate through a few segments, but their top segment is going to be the Google Services segment, which provides products and services such as ads, Android, Chrome, hardware, Google Maps, Google Play, Search, and YouTube. And that's the biggest reason why I actually have this stock on here. It's because I started to invest pretty heavily into Google after I remembered that YouTube is a part of Google. So I want to help promote YouTube through Google, considering that a lot of my income actually comes from YouTube. So I want to reinvest into them so that they can be better for me to use as a platform in the future. But if we look at an overview of Google, they do have a market cap of about $1.7 trillion, which is a lot. For comparison, Apple is about $2.1 trillion. Microsoft is about 1.9, I believe, or maybe even 2 at this point. But yeah, they have a PE ratio of 34, which is not bad at all, especially for a stock of Google's size. As for earnings, Google absolutely killed it recently with a beat of $10 on their earnings per share. They were expected to have $15 and they actually had 26. They beat all 4 of the last quarters, and I expect that to continue in Q2 of 2021. Their next earnings date, I believe, is at the end of July. Do not quote me on it though. As for their financials, they have increased revenue every year, as well as earnings every year, and their earnings absolutely killed it in the last quarter. We'll see if that continues in their next earnings call. As for Yahoo Finance's recommendation system, they are 1.6, so that's between a buy and a strong buy, one of the highest buy ratings that I've ever seen Yahoo Finance give out. If we take a look at statistics, they have a trailing PE of 33 and a forward PE of 31, so overall their price to earnings ratio is getting lower, which is good for us investors. They are also profitable, so they are at about a 26% profit margin, which is extremely good for a company of this size. If we take a look at their balance sheet, they do have about $172 billion worth of current assets and only about $55 billion worth of current liabilities, so overall tripling their current assets to liabilities number. And then they only have about $27 billion worth of debt, which is nothing. It's a drop in the bucket compared to their total or their current assets. So overall, Google is going to be a staple of any good ETF or portfolio that you may create. For our next stock, we are going to have Space or Virgin Galactic. Virgin Galactic is a integrated aerospace company that is run by Richard Branson. The financials on this one get a little bit wonky, and I'll go over why that doesn't really matter at the moment. But if we get into the overview, the market cap is about 10 billion, which is pretty high for this, I will give you that, but it's kind of pricing in future outlook. And then obviously we have earnings coming up sometime between August 2nd and August 6th. Not really sure at the moment. It is looking like Space is going to be good long-term, mid-term, and then bad for the short-term, according to Yahoo Finance. As for their earnings calls, they have not performed well over the past 4 quarters, but that's not the reason that we're going over Space today. Obviously, they have done about 1.75 million in revenue, and then only 238,000 in revenue. And mind minus 644 million in earnings. And obviously this is a future growth play. This is probably the riskiest stock that I'm going to go over today, and honestly I was trying to get a far range of stocks for this video so that you guys can kind of price in more risk if you guys were going to actually purchase any of these stocks. But yeah, so as for a recommendation rating, it's between a buy and a hold for Yahoo Finance, and yes. As for the statistics, they have a 0% profit margin and return on assets negative 28%. And you might be thinking, oh, all of this is trash, Zach. Well, if we go to their balance sheet, you can see here that their quarterly balance sheet, they do have about 674 million in current assets and about 118 in current liabilities. So their balance sheet looks great. Income statement and cash flow, terrible. It's because they don't have any cash coming in yet, because they are they also have $0 in total debt, by the way, but they are trying to price in the future revenue that they're going to have. So a lot of people believe in Virgin Galactic's mission, and let's get into what that is right now. So you can see that Virgin Galactic shares just surged and then pulled back as Richard Branson aims for the lead in billionaire space race. So basically Jeff Bezos also has a space company, and Richard Branson, a billionaire himself, has his own space company, which is Virgin Galactic, which is the stock we're going over right now. Basically, Virgin Galactic said that they were going to do a spaceflight test that is going to carry Richard Branson, the founder and the owner of Virgin Galactic. So that made the Virgin Space's stock price go from about $45 all the way up to $56 at some point yesterday. And today it came right back down to $44, and that's why I think it's, you know, a very good buy going into July 2021, because they will have this catalyst coming up, and it's honestly looking like a good price at the moment. So basically they have a great roadmap, and they want to eventually get people like me, like you, into space. So that is why this is going to be on the July 2021, because July 11th they will be sending him into space, and it's honestly just a good risk play to go into your portfolio. The fifth stock that we're going to be going over today is going to be Teladoc Health. Teladoc did very well last year during the pandemic because they provide virtual healthcare for people like you and me. Obviously, you can see why this did well last year, because a lot of people needed virtual healthcare visits, so their business went straight up. If we look at an overview of TDoc, then we can see that it's worth about 25 billion at the moment, and the performance looks good for the short term and mid-term, but bad in the long term. And also they have missed on the last 4 of earnings call they've had, and they have an earnings call coming up on July 27th, so hopefully they can perform better July 27th. If we take a look at financials, revenue obviously shot up last year, but their earnings did go down as well. But overall, over the last 4 quarters, they have been getting their earnings up a lot. And their earnings, they had more revenue and did better on earnings in Q1, so they're heading in the right direction. Hopefully we continue to see more revenue going into the next earnings call on July 27th. As for a recommendation rating from Yahoo Finance, they do have about a 2.2, which is between a buy and a hold, but closer to the buy. The reason I really want to look at Teladoc is because they are beat down a lot from highs. As you can see here, at the highs they were at about $290, and now they're sitting about $164, a much better price. And if you can see here on tip ranks, they do have a 40% upside for the average analyst price target at about $231 from where it's at now, $164, and at a high there is a price target for $300, and not a single analyst had them as a sell at the moment. But yeah, I just wanted to include this one because I see a lot of value here, and I think that this could be a good business model going forward, and they have done well with their revenue. I'm interested to see what they do on their earnings call July 27th. And the final stock I'm going to be going over in today's video is going to be NVIDIA. A lot of people think this is going to be the next stock to double and actually get into the trillionaire club. Right now they have about a market cap of about 510 billion. NVIDIA is one of these companies that actually makes Bitcoin mining graphics cards, but they don't only make graphics cards, they also make other hardware in the gaming sector, and they're in the red hot gaming sector and have been improving a ton. So we already said that they have a $510 billion market cap, and a lot of people think it could double soon. Earnings per share, they have 8 earnings per share and about a 96 P ratio, not too bad. Their earnings date is going to be in mid-August, so not going to be able to run off too much hype in July. I just really like NVIDIA, and there is a catalyst coming up that will be very interesting for NVIDIA. But overall, pretty good outlook according to Yahoo Finance. If we look at their earnings per share, they have beat every quarter for the last 4 quarters, and they do have a very good, strong upward trend. I'm very interested to see how their earnings do in Q3 of 2021. I think it'll be great. Over the last 4 years, they have been improving their revenue up to $16 billion in 2021. Q2 of 2021, we have $5 billion, an increase of about 500 or 600 million in revenue, and earnings have been increasing as well. According to Yahoo Finance's recommendation system, they are between a buy and a strong buy, closer to the buy. But yeah, overall analyst price targets, they are above the average, but they do have a high of about 1,000 for that price target. If we do look at the statistics, we can see that we have a forward PE ratio of 50, which is not bad for a tech company at this point, and they have a 27% profit margin, which is extremely good for a tech company of their size. If we can take a look at their financials really quickly, at their balance sheet, they do have about $18 billion in current assets and only $4 billion in current liabilities, but they do have $7 billion in debt. Overall, still a ton more current assets than current liabilities and debt. So honestly, NVIDIA is looking very good in a very good financial state right now. A very good catalyst NVIDIA has coming up is that they will have a stock split that is going to make NVIDIA's stock price even cheaper, so it could encourage investors to get in. A lot of people don't like when a stock's price is very high, so they will be doing a stock split to kind of make that price lower, so it's more appealing to get into to the eye. But overall, NVIDIA is one of my favorite stocks at the moment. It's going to be a staple in my portfolio. It's going to be up there with the PayPals, the Googles, the Apples of the world. Actually, it's already bigger than PayPal, but the Googles and Apples of the world, it's going to be up there, maybe half the value of those, but overall very good. It's doing very good, and I'm excited to see what they do in the next earnings call. Well, thank you to everyone who watched all the way to the end. If you guys could please leave a like and subscribe, that would really mean the world to me. And also, if you guys want to comment your favorite stock for the month of July, I'll definitely try to respond to as many comments as I can. If you guys are interested in getting 2 free stocks from WeBull, go ahead and click on the pinned comment or the first link in the description. You guys can get 2 free stocks from WeBull. All you have to do is deposit $5 on the Webull platform, and you can get 2 free stocks worth up to $2,300. But that is going to be it. Thank you everyone for watching. Thank you for your time, and I hope to see you in the next video.